Hi everybody, Eric Hendrickson giving you the Mortgage Minute for the week of July 18th. What we saw last week was the Consumer Price Index came out. It's a very closely watched inflation gauge and it came in really hot. Actually numbers that we haven't seen that high since back in 1981. So that's the bad news. The good news is after a little bit of a knee-jerk reaction for home loan rates to go up, we really stabilized and we kind of leveled off. I think investors, kind of the long-term view is that as this inflation is so heavy that the Fed's going to continue to act aggressively, and actually we're going to go into a little bit of a recession, which would slow demand down and allow supply chains to catch up and actually have prices come down. Whether that's reality or not, certainly we're going to watch the next several weeks to see kind of what happens with demand and what happens with inflation. The Federal Reserve sounds like they're going to do a 75 basis point bump to the Fed funds rate. The good news is that's already pretty much priced into home loan rates. You will see that in credit cards, commercial loans, variable rate home equity lines of credit are going to become more expensive, so watch out for that. But again, we've been kind of trading in this narrow range for home loan rates. That's the good news, that it hasn't really moved too much. On the housing front, I think these interest rates are having a little bit of an impact, but I do think the higher prices, lack of inventory, certainly for new construction, the inability to get product built in a timely nature, that's just allowing people kind of enough information to kind of take a time out. So it'll be interesting to watch the housing market here for the remainder of the year. That is certainly a kind of a leading indicator for the rest of the economy. That's the update for this week. Talk to you soon.